Lizzie. All right, so let's get started. Okay. Well, welcome everyone. We at the Karsh Family Social Service Center are excited to partner with the U.S. Department of Education, Office of Federal Student Aid to share crucial information about the Public Service Loan Forgiveness Program. Karsh Center is a nonprofit organization dedicated to improving the lives of the underserved by providing critical and accessible social services through direct services or collaboration with other providers. We are very proud to host today's program, knowing that the resource of public service loan forgiveness is a crucial one for many of us who work in the nonprofit and public service sector. And we're thrilled to see so many faces from our community here today. Now I would like to introduce our presenter. Maisha K. Challenger is an awareness and outreach specialist for the U.S. Department of Education, Office of Federal Student Aid. Maisha is responsible for disseminating pertinent information about federal student aid to eligible individuals. She also conducts presentations, training sessions, and participates in panel discussions nationwide. Prior to joining the U.S. Department of Education, Maisha worked as an education lobbyist for Carmen Group and a high school substitute teacher at Friendship Collegiate Academy Public Charter School in Washington, D.C. Maisha earned her BA in History of Mount St. Mary's University and her Master's in Public Administration from American University. So we would like to introduce Maisha Challenger with us today, who is all the way from DC, from New York, joining us today. Thank you, Maisha.
Thanks, Francis, for the introduction. I want to say good afternoon, but it is morning for you all. So thank you all for joining us. It is around 2 o'clock here. I am in actually Brooklyn, New York. I moved from Washington, D.C. right before the pandemic. I moved back home. So I am a native New Yorker, and I'm really happy that I have been able to speak as an outreach specialist about so many important information as it relates to federal financial aid. And today we are going to talk about a very hot topic, which is public service loan forgiveness. So let's get started. I am going to share my screen. Hopefully you all will be able to see my screen. Someone give me a thumbs up, please, if you can see my screen. Thank you all so much. So how to apply for the Public Service Loan Forgiveness Program. I'm sure a lot of you have heard about this program. I'm curious if anyone, so let's put in the chat. Has anyone heard of the program or actually applied already for the program? Please just drop in the chat, yes or no, while we go through this. So what I am going to do today is talk about the basic program. The program has been in effect for a few years, but there is Public Service Loan Forgiveness Basics, but then there's also a limited waiver, and that is kind of the cherry on top that is a recent addition to the program that is going to really blow your mind when we talk about who can, how that impacts you all. And then actually applying for the program, we'll do some scenarios and myths, and then I'll share some online tools and resources, okay? Let's see, let me look at the chat real quick. No, not yet, it's new to me, yes, applied, okay, perfect. So there's, yes, okay, so some of you have applied. I wonder if you all have known about the limited waiver, so maybe you applied previously, and now with the limited waiver, there's a whole extra space or addition to the plan that is going to include so many other individuals. So let's get started. So I'm going to talk first about the basic program. What is public service loan forgiveness? And I'm going to read this definition because it's really important to understand. What it is the Public Service Loan Forgiveness Program, or PSLF, we love acronyms with the department, forgives the remaining balance on your direct loans after you have made 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer. That's a lot of qualifying, but I'm going to say that again. What it is it forgives the remaining balance on your direct loans. There's a type of loan you have. We'll talk about that. After you've made 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer. So There's a repayment plan we have to discuss. There's a qualifying employer. But basically what it is after you've made the 120 payments, it can also be almost the equivalent of 10 years, then the remaining balance will be forgiven. You all, some of you have loans, and the majority of you may have loans. There's a loan servicer. And so for public service loan forgiveness, the loan servicer is Mohila. A lot of you have heard of Fed loans, and they were the servicer that actually housed the loans, but then those loans have now been transferred to Mohila, and they will administer PSLF for all direct loan borrowers. So in order to qualify, you must submit a form, and the servicer, which is Mohila, will determine that your employment qualifies. We'll look at your loans as well, your direct loans, as well as FEL loans that have been consolidated that are held by the department. And then that's how you would apply and see how many payments would qualify for public service loan forgiveness. So let's dive a little bit deeper into that. So here's just a little org chart of what it is again, 100, and I will make sure you all get a copy of the slides because I think it's important to hear what I have to say, but it's good to kind of, think about it all, digest it all, and kind of go back through. So it's 120 qualifying payments, right, on direct loans while working for a qualifying employer, when applying and receiving PSLF. Now, it's also important to understand that under the basic plan, whatever amount is forgiven. So let's say you've made 120 payments and you have a remaining, and the amount forgiven is $60,000. You're not going to be taxed on that. A lot of people think, oh my gosh, this amount that was forgiven, I'll be taxed on it, but the forgiven amount is not taxable income. So that's also a plus as well. So let's talk about eligible payments. This is under the basic plan. Under the basic plan, an eligible payment is an on-time payment, a payment that is in a standard plan, which is a 10-year plan, or any IDR plan. So we love acronyms. An IDR plan is an income-driven plan, okay? And an income-driven plan is an umbrella. So some of you may have heard of an income-based repayment plan, an income contingent. There are various different income-based plans that fall under an IDR plan. Those plans qualify for public service loan forgiveness for at least the amount due. So it has to be for the amount due. And they can be non-consecutive. So a lot of people think, oh, wait a minute, if I haven't made a consecutive payment, then it doesn't qualify. That's not true. It can be non-consecutive. Now, what doesn't qualify for an eligible payment is if it's more than 15 days late in a graduated, extended, or alternative plan. So remember I mentioned the IDR plan or an income-based plan. Well, there are other repayment plans, a graduated, extended, or a different type of plan. Those plans under the basic plan do not qualify, and then for less than the amount due. So again, this is the basic public service loan forgiveness plan and basic information in order to find out whether you qualify. So these are payments. Let's talk about eligible employment. So full-time for the program purposes is 30 hours a week or the equivalent. Working as a government entity. So you could be federal, local, state, including military. Now, this applies to you all because 501c3s, nonprofits, are eligible employers for the Public Service Loan Forgiveness Program. There are some limited exceptions. Now, what does not count is part-time work that does not add up to full-time work for a qualifying employer. So remember, I mentioned 30 hours. Volunteer work does not qualify, and for-profit entities do not qualify. Now, another question that I get a lot are contractors. Well, do contractors qualify for public service loan forgiveness? So if you are contracted by the qualifying employer directly, then you do qualify. However, if you are a contractor that is contracted out by a third party to the qualifying employer, then you do not qualify. I hope that makes sense. So if you are contracted directly by the qualifying employer for the 30 hours a week, then you do qualify. So that's the basic plan. There is something called temporary expanded public service loan forgiveness. Remember, I mentioned that there are plans outside of income-driven repayment plans. So what this says is basically individuals who didn't qualify for public service loan forgiveness because of the plan they were in can qualify if they made a payment that was the equivalent to what they would have made had they been on an income-based repayment plan. It would have had to have been 12 months before applying. This is a group of individuals. So basically they would have made the same payment they would have made had they been on an income-based plan, but they weren't. That is temporary expanded public service loan forgiveness. And you can also apply to get forgiveness as well. Now, I'm hoping that some of you during COVID, during the pandemic, were taking advantage of a payment pause that the department had. And what happened was around March 2020, there was suspension of federal payments, 0% interest on your payments, and we called it COVID-19 flexibilities, or a payment forbearance. So basically, you do not have to pay your loans, and we actually extended it out again. We've done a few extensions. The final extension will be December 31st of this year. So loans have been in forbearance, but those loans that have been in forbearance are also eligible for public service loan forgiveness. So you're getting a credit, basically. So from March 2020 through now, it's over 24 payments. Even though you haven't been making those payments will count. So that's over 24 payments that will count as credit towards that 120, even though you hadn't been making the payments. So it's really, really critical to apply, because basically you're adding numbers to that 120 without even having to actually have made a payment, which is really cool. So that was a very high level about the basic public service loan forgiveness plan. So remember, I said an income-driven plan, on time, doesn't have to be consecutive, qualifying employers at least 30 hours a week, you can't be a for-profit. Those were some of the basic parameters. So I'm about to throw all of that out because the limited waiver is what I want you all to absolutely pay attention to, because this is going to be a game changer. So let me show you what it means. So what the limited waiver says, no matter the loan program, no matter the repayment plan, no matter the loan type, basically, if you apply for public service loan forgiveness now, past periods of repayment now count towards your 120. So you still have to be employed full-time and for a qualifying employer when the prior payments were made. So let's say you're somebody who never heard about public service loan forgiveness. And today you were like, okay, Maisha's telling me about this program, but you've worked for the Karsh Center, let's say for the last 10 years. And let me also say this, for the public service loan forgiveness program, payment counts start from October 1st, 2007 moving forward. So that is where we have decided that the payments will count from 2007 moving forward. So let's say you've been working for the Karsh Center for 10 years. Instead of starting from scratch today, those past periods of repayment when you apply will now count. So you actually may be at your 120 and the remaining balance is forgiven. It's mind-blowing. So a lot of people, as a result of this limited waiver, are going to be able to go back to previous periods of repayment and count those. Now, here's another thing. Where you work now is one place, but let's say you worked at another employer that's qualifying. There can be 4 or 5 or 6, there can be a multiple amount of qualifying employers previously as a result of this limited waiver where you can apply. And what they will do is add all of those counts, which more than likely, hopefully will get you closer to that 120. And once you get to that 120, the remaining balance is forgiven. This is absolutely amazing. And I'm going to compare the basic plan to the limited waiver. The caveat is you have to apply, you see at the very top, before October 31st of this year in order to take advantage of the limited waiver. Now, let me also say this. The very last part says the borrower who still has a FEL or Perkins loan. So a lot of the public service loan forgiveness program requires people to kind of learn a little bit about what type of loan they have. A lot of people don't know the type of loan they have, right? So do you have a direct loan? Do you have a FEL loan? What type of repayment plan am I in? So I personally had a FEL loan when I was in graduate school. So FEL loans under the basic plan did not qualify for public service loan forgiveness. So I've been making payments for a long time, but I was never able to take advantage of the limited waiver. Now, thanks to the, I wasn't able to take advantage of public service loan forgiveness. Now, as a result of the limited waiver, in order for me to take advantage of the program, I have to consolidate my FEL loan into a direct loan. So you have to consolidate. And then once I consolidate, I then can apply because my employment at the Department of Education will absolutely count. And I've been working for the department over 12 years. So I am more than likely at my 120 as a result of the limited waiver. I don't have to start from scratch. which is amazing. And then remember, I mentioned the COVID flexibility. So even the payments that you weren't making during COVID will also count towards the 120. Okay, it's really important to understand that the limited waiver is absolutely amazing. So here's another breakdown. I'm hearing a little bit of static, so I don't know if you guys can maybe put your phones on mute. I would really appreciate it. Thanks. Just a little bit. So here is another breakdown of the borrower groups when we're talking about the limited waiver. If you've only borrowed direct loans, you want to fill out a public service loan forgiveness form since you borrowed the loan, which I mentioned the time frame is from October 1st, 2007, moving forward. If you've previously consolidated into a direct loan, so some people have already consolidated, but they have direct loans, you want to fill out the form. And then if you still have a FEL or Perkins loan, you need to consolidate your loans into a direct loan program and fill out the form. So a lot of people have direct loans. They didn't realize they've had direct loans, never applied, and now they can apply, and those past periods of repayment will count. They won't be starting from scratch. Another caveat that I want to share, which is really cool, is let's say you apply for public service loan forgiveness, and remember I mentioned 120 payments. Let's say they go back and count and you've actually made 150 payments and you have direct loans. On your direct loans, you've been paying 150, you've made 150 payments. What they will do is give you an over award. So the additional 30 payments you will actually receive back in the form of a check. And so that's another step. So not only are your loans forgiven, but you'll receive the additional amount of the additional payments in a check in a form of an overpayment. Unfortunately, which is a little frustrating for me, I have FEL loans. So as a result of consolidating and taking advantage of the limited waiver, if I have made overpayments, I will not receive that. It had to have been if you have been making payments from the beginning on direct loans. But listen, forgiving my loans after the 120 is enough for me, but that's also another incentive to absolutely apply. Now, something else I want to share with you all is some things you need to know about consolidation. And this is important because here, I'm sure some of you are probably like, well, how many payments do I have now? A lot of people are like, how do I know I'm at 120? You won't know. And I think you don't know right now, but there's ways you can check. You can find out who your loan servicer is and actually look at your loan portfolio and look at your payment history. Now, remember, I said qualifying payments. The department in MOHELA will make the final determination. But if you want to gauge how close you are to 120, you can probably look at your account and count and see where you are. Again, the department will make the final determination. But here's something to know about consolidation. Your monthly payment may go down, but you may have to pay longer. You may have unpaid interest, but your principal may go up. Your new consolidation may have a new interest rate, and you don't have to consolidate all your loans. So I will share with you my own personal circumstance because I did apply for public service loan forgiveness and I had FEL loans. I had to consolidate because remember, FEL didn't count on its own. It had to be consolidated into a direct loan. I was on an extended graduated plan. So I had my payment amounts were a lot lower than something that would have been on an IDR plan. So as a result of the consolidation, my new payment amount is significantly higher. Okay. So that's where you won't know what that amount will be until you apply. And the thing with me is because I know I'm at the 120, I'm not going to make those. I won't have to make those payments, but you have to decide once you consolidate, you cannot unconsolidate. But is it worth it because you potentially could be close to the 120? Totally up to you, but I do think it is beneficial to definitely apply. So I've got to tell you that there are some things to understand if you have to consolidate. Everyone doesn't have to, but if you have a FEL loan, you will have to in order to take advantage of the program. So here is a side-by-side comparison of what changed as a result of the basic plan and the limited waiver. And there's something I left out that is also a question I'm sure some of you have. So the basic plan says you only receive credit on direct loans. Under the limited waiver, you receive credit for periods of repayment made on direct, FEL, or Perkins. It doesn't matter the type of loan. For the basic plan, it must be under a standard or income-driven plan. For the limited waiver, past payments under any plan count, okay? Which is really key. Now, here's the thing that I didn't mention. Payments must have been made on time for the basic plan. Under the limited waiver, past payments that were made late or for less than the amount do count. So remember earlier I said they can't be more than 15 days late. Well, under the limited waiver, That doesn't matter. It's any payment, whether it's late, less than, if a payment was made, that's also going to count. So again, it's increasing the number of payments that can be applicable to the 120 under the limited waiver. And then the basic plan says you can only receive forgiveness if working for a qualifying employer at the time of the application. Under the limited waiver, and I did not say this, even if not employed by a qualifying employer at the time of the application, you can still receive forgiveness. So let's say for individuals, and you all work for a 501c3, so you are eligible now, but let's say someone right now did not work for a qualifying employer, but as I mentioned previously, for 10 years they did. They can still apply and get credit for those past periods of repayment. So you don't have to currently be working for a qualifying employer if you previously worked for a qualifying employer with the qualifying hours working full-time. Okay, so again, the limited waiver really is an amazing space to take advantage of. Now, Parent Plus loans or plus loans, I want to talk a little bit about that. Plus loans are where there's a grad plus loan for graduate students and a Parent Plus loan. The parent can take out a loan on behalf of the student. Parent Plus loans are not excluded from public service loan forgiveness, but in order to take advantage, they must be consolidated with a pre-existing loan. So let's say you're a parent, you have a Parent Plus loan you took out on behalf of your child, and then you had a loan you took out when you were in school. In order for the loans to qualify, you have to consolidate your student loan and the Parent Plus loan. So let's say on your Parent Plus loan, you've made 40 payments, and on the student loan, you've made 50 payments. Well, for the plan under public service loan forgiveness, unfortunately, you won't get the full 90 count. You'll only get what you made on the student plan. That's just how the policy is. I'm not really sure why, but understand that in order for Parent Plus loans to be qualified for public service loan forgiveness, they have to be consolidated with a pre-existing loan that you have, and the payment count will only be for the payments you've made on the pre-existing loan, not on the Parent Plus loan. So just FYI for individuals to know. So you all need to take advantage of this waiver. I know it's early there, but it's really life-changing because it's only available until October 31st, and October is like in a week. We're going to be here right away. And a lot of people, I've been getting a lot of calls from friends about the program because a lot of them are like, well, what counts? What doesn't count? What if I didn't make a payment? What if I did make a payment? I'm going to talk about deferred payments and forbearance in a second because there's also been an addition there as well. But this limited waiver absolutely is a game changer. So how do you apply? I've given you a lot about the basic plan and the limited waiver. There is a form that you need to fill out. The form is online. Again, the link is, it's on studentaid.gov. It's a public service loan forgiveness help tool. And what you would need for this certification form is your name and something called an EIN, the employee identification number. So you will need your employer to sign to verify your employment, and you will also have to sign this form as well. Okay, where you can find this form again is online. Now there is also a employer search tool. You all work for a 501c3, so I'm sure the Karsh Center is a qualifying employer, but let's say you worked for a previous employer and you're not sure whether or not that employer is a qualifying employer. We have a search tool where you can look for that employer. Now, someone asked me, well, what if that employer is not there, but I do think they're a qualifying employer, and I have also worked the full-time qualifying hours? You can still submit the form because the help tool or the qualifying employer list is still changing. We're still updating it. So if the employer is not there, it doesn't mean you don't qualify. What you can do is still fill out the form, send it in, and then attach your W-2 with that employer when you submit the form. And then the department will determine, along with the servicer, whether or not that employer does qualify. But if a lot of employers are in the system, you would then submit the form with your signature, along with the employer signature. It's usually someone in HR, along with your EIN number. And then you would wait to hear back regarding your payment count. Now, the link for the help tool to apply is online is here. This is just a screenshot of what the different steps are. The employment history, loan tips, application details, personal information, and then you would review and save. In order to log in, you need an FSA ID. That's what you would use to sign the FAFSA form when you all did that. So that is also the tool. It's a username and password. You can create one if you don't have one to then start the process of filling out the form. This is just for service members that instead of the employee certification form, there is another form that they can submit. It's a DD 214S. So it just basically helps military members fill out a different form and they can still receive credit for public service loan forgiveness if they use that form. So here's another thing that I wanted to share with you all. In order to send in the form, you have to send it in via mail or fax. So it is not something you can use electronically yet. You can upload it. So if you already have Mohila as your loan servicer, you can upload the form if Mohila is your existing loan servicer. If you have if you have a different loan servicer now, a lot of us do. I was with Navient, and when I consolidated, they transferred me over to Mohila. Then the only way to submit the form is to mail it. So you probably will have to print it out. Then you can get everyone's signature. You can email the form to your employer. They can sign it. They can send it back. Then you would need to print it out, sign it. Then you can then you would need to mail it in. Okay. So we have the address for Mohila, and then you could also fax it. Faxing is still very expensive. We are working on figuring out a better way to have the form uploaded once you have the signatures, but for now, you still do have to mail it in, okay? Let me also say this. It will take some time between when you fill out the form and when you will receive a response about your payment count. I want you all to get the process started, because once you're in the process before October 31st, then you are okay. There is a question on the form that does ask, and this may be a question that has come up, is what happens if the repayment pause? So return to repayment was supposed to be October 31st. They extended it until December 31st. So you will have to start repaying your loans January 1st. What happens if you don't have an answer yet, right? Because you're like, I may be at the 120. When you fill out the application, there is a question that says, in this process, do you want to continue making your payments, or do you want to request a forbearance so that until you make your payments, you don't have to, until they make the determination, you don't have to make payments? You can check that box. That way you don't have to worry if you don't have to worry if you don't want to make the payment, or if you want to make the payment, it's totally up to you. Some people know they're not close, but they want to still make the payment so they can get closer. Some people may feel like, wow, I'm really close. I don't know that I want to make a payment and I don't need to. You have that option when you are completing the form, but you still do have to mail it in, okay? So here's an example of signatures. Most people handwrite it. There are some other options you have, a scanned photo. I kind of suggest just sign it, like with a pen. But there are some other options. It can be hand-drawn from a signature pad or mouse. You can do all of that. And then again, the address to where you need to send it into Mohila is listed below, along with the fax number. Okay. I have been talking a whole lot. I don't know if there's a lot of questions, but I want to do some scenarios. That way I can figure out if what I've been telling you all makes sense. And hopefully, if you get it wrong, then that means that I'm not telling you what you need to know. So let's go through some scenarios. And if you all don't mind, put your answers in the chat about what you think the outcome should be. Okay. All right. So here's the first scenario, and I'll check the chat. Carmen has been employed with a nonprofit center for 10 years. However, she had a financial hardship, and due to personal circumstances, she was only able to make partial payments. She believes she is close to 120, but worried that she isn't eligible. Any recommendations? So Carmen has been employed with a nonprofit center for 10 years. She had a financial hardship and was only able to make partial payments. Check the number of eligible payments by applying, okay? She believes she's close to 120, but worried she isn't eligible. So should she apply? Do you all think she should apply? She should apply. Now it says she's made partial payment. So remember, under the limited waiver, it doesn't have to be for the amount due. It can be any payment. It can be for less than. Now, what's another circumstance with this? It says she's been employed, but does it say for full-time? Right? So that's the other thing. The full-time, even under the limited waiver, it still has to be a qualifying employer, and it still has to be full-time, which is up to 30 hours, right? So that's another key piece. But yes, Carmen should absolutely still apply. Okay, here's the next scenario. Jermaine has been in the field for over 25 years. He started paying his loans back in 2004. He is sure he's made over 120 payments by now. Do all of his payments count? What do you guys think? That's a long time. He says he's been in the field. So do we know that that's a qualifying employer? Let's say it is. We don't know, right? But that's the first thing. Is he full-time or part-time? We don't know that, right? So it says he's been in the field. But let's say he's full-time. Let's say he's full-time and it's a qualifying employer, and it says he's been paying his loans back in 2004. Do all of his payments count? What did I tell you all about the year that this program starts? You all remember the year it starts? So the year it starts is 2007, exactly. So he wouldn't get payment, he wouldn't get the credit from 2004 through 2007. But if he is working full-time with a qualifying employer and it's in the field, then yes, he would get credit for a lot of that time, and foreseeably his loans would he would have met the 120. So, okay, got you guys thinking a little bit. Yes, definitely apply. It doesn't hurt to apply. There's no penalty to apply. Okay, here's a good one. Alexis started working with two part-time positions. Sorry, you all. Alexis started working with two part-time positions, one 15 hours as a government contractor and the other 15 hours with a private for-profit company. She then began working full-time for a school for 2 years and now is full-time with a local nonprofit for the last 3 years. She knows she still has payments to go, but should she still complete the PSLF form, and how many payments would count? All right, what do you guys think? So it says she started working two part-time positions. So one is 15 hours as a government contractor, and the other is 15 hours with a private for-profit. So she's got her 30 hours, but do both of the companies qualify? Does the government contractor qualifies, but the private for-profit does not, right? So the for-profit does not. The last 5 years will likely count, but not the ones before then. Exactly, Kathleen. That's exactly right. So because she was working full-time for the school, and we're going to assume that the school is a qualifying employer, that's not always the case. Every school may not be. That's why you've got to use the employer search tool. But if it is a government entity, if it's a federal, state, or local entity, then yes, the last 5 years would definitely more than likely count, and she should absolutely complete the form. Okay, you guys got it. This is good. Okay, let's do a few more. Beth, who is an active duty service member, has made 120 payments on each of her federal and private student loans, but not consecutively. When the news came out about the limited waiver, she decided not to apply because she heard the payments needed to be consecutive. Is that right? So we all know, I think we talked about it, that the payments absolutely do not have to be consecutive. Now it says she made 120 payments on each of her federal and private loans. Let me go back for a second. The federal loans will count. Private loans do not qualify for public service loan forgiveness. You can also not combine your federal and private loans. So there is companies like SoFi where people refinanced or consolidated their loans with an outside or third party. Unfortunately, if you have transferred your loans over to a different entity like a SoFi, then they don't qualify for public service loan forgiveness. That's unfortunate because a lot of people decided to leave the servicers and use another entity to finance their loans. So SoFi does not count, and also private companies, private loans do not count for public service loan forgiveness. Okay, so yeah, you guys got it. So she can absolutely still apply and hopefully take advantage of the program. Okay, we've got two more. Okay. Pat tried to apply for PSLF, the Public Service Loan Forgiveness Program, 5 years ago, and she was ineligible because she didn't have a direct loan. When she heard about the limited waiver, she decided not to apply. Well, we know the answer to this. This is an easy one, right? FEL loans under the limited waiver and Perkins loans do count, and Parent Plus loans can be consolidated. So now under the limited waiver, individuals who used to not be able to apply, that it was not applicable, is now applicable once they consolidate. So that's an easy one. And then the last one is, Jeff has heard from people in online forums that if his federal student loans were forgiven, he would have to pay taxes on the forgiven amount. This is an easy one. He loves his career, but he's worried that it will create a financial burden for him. Does he have to pay taxes on the forgiven amount? You all know the answer to this one. He does not, right? We talked about that. Okay. So you guys got it. I mean, I wanted to just give you a couple of scenarios, and I know we'll take some questions at the end, but it's really important to see there's definitely different scenarios that need to play out, but the limited waiver does kind of cover a lot of situations. Okay, so a couple of quick updates. So there was in April, and this is just on the back end, that the department announced that there will be a one-time adjustment on forbearances and also deferments that occurred towards public service loan forgiveness. So what it is that the department will look back at everyone's account. It'll be a one-time adjustment. There is nothing that you need to do, but just know that they are adding based on the type of based on when it happened. So again, you can see here, it'll be a one-time adjustment on forbearances of 12 or more consecutive months or 36 cumulative months, and it will count months spent in deferment towards IDR as well. So again, it depends on when it happened, but they are going to add counts if this is applicable to you. You won't know. You will get a notification if it is, but again, there's nothing you need to do on your end. But this is just another step towards adding payments. Now, deferment and forbearance is not default. Default means you weren't making a payment at all. Deferment is you've deferred, and the forbearance is of economic hardship, but those are applicable for this one-time adjustment, okay? And then lastly, and then we'll take some questions, the limited waiver, if you want information, a little bit more information, we have a page on our studentaid.gov website. We have the help tool where you can apply online. We have the Mokila phone number. Some of you may be trying to write it down, and the fax number. I'll make sure I send over this PowerPoint presentation along with a PDF in a PDF form so that you can utilize all the resources here. Now, one more thing, and I'm sure you all have heard about this, the student debt relief plan. So on August 24th, President Biden spoke about relieving, it's called student loan debt cancellation, where it will, I'm sorry, you all, let me move this over. So what it does is there will be debt relief of up to $10,000 for individuals who make less than $125,000 and $20,000 for individuals that were Pell eligible while they were in school, or income or household income of less than $250,000. So it's $10,000 for individuals who make less than $125,000, and or if you're in a household that is less than $250,000, and the $20,000 is if you were Pell eligible while you were in school. There is going to be an application, and this is still in the works. That's why I'm hesitating, because the processes and procedures are still being created. So once I have that, I will share with you all, but we also have a page on the student debt relief announcement. So it's important to know that there will probably be an application in order to take advantage of this. I've also been asked, well, how would this work with PSLF? I'm hoping on the back end that, let's say you owe $100,000 and you qualify for the $10,000 student loan debt cancellation, and you're also applying for public service loan forgiveness. I would assume that it would just remove the $10,000. So instead of $100,000, it'd be $90,000, but you would still need to meet the requirement for public service loan forgiveness. We're still working it out, but this $10,000 is key. The point or the caveat is the income threshold in order for you to apply, okay? If you want more information about all things related to public service loan forgiveness or financial aid, we have a Facebook page, we have a LinkedIn page, Instagram, YouTube, and Twitter. We also are conducting a financial aid bootcamp in the month of October, so I will make sure Elizabeth and Francis know about it so that you all can sign up. It will talk about public service loan forgiveness again. We'll talk about the FAFSA all things FAFSA related. We also have a webinar on policy updates next week. So we're constantly doing webinars. I'm not only presenting to you all, but I'm also the webinar manager. So I think with this information, repetition is necessary because there's just so many pieces to it. So that's it for me.
Thank you, Maisha. We've had a few great questions come in
Okay.
throughout the presentation, so I will read them and drop them in the chat for you.
Okay.
So first we've got from Kathleen, is quote, made when not required applicable to payments made during the COVID-19 deferment?
So yeah, so I think I've gotten that. So people are like, if I made the payment and I didn't need to, do I get like double the payment? No. So it would still count as one payment. So it's, if you made it during the COVID pandemic, but you weren't supposed to, it will still count as a payment, if that makes sense, because you made the payment. So you won't get double for that. It'll just count as one payment.
All right, thank you. And then we've got
You're welcome.
from Alicia, if I do my math correctly, I think I've made only 117 payments.
Yep.
If I apply now for the limited waiver, would I qualify once I make 3 more payments?
I think so. Yeah, I mean, and I don't say it like that. No, I'm sorry. That got answered later. Sorry. Yeah, no, absolutely. I mean, you I see you up there, Alicia. Yeah, no, I mean, you have, that's why it's great. And that's why you go back and check, right? People are like, oh, wow, I can go look. You can absolutely count, you all. I think Alicia's the circumstance where she's close. So it absolutely makes sense. And Alicia, I don't even know if you counted during COVID. So if you've counted those, then you have 3 more payments if you have direct loans, right? If you are in that program, then you've got 3 more payments and then you're done versus, listen, I feel like we've all been told for the rest of our lives, we're going to be making payments on our student loans, right? It's like a mortgage payment. Like, to know that you can be done sooner than later is really, really great. So absolutely. But there might be someone who only has 30 payments, right? And so then that's one of those, well, does it get them closer? If they consolidate, it might be a higher amount. It really is up to you to decide, but I feel like, why not? I mean, versus having to just continue to pay. So yes, it definitely is worth it to apply.
And then we've
Or
got
October 31st.
From Jacqueline, we've got, what if you made 2 payments in 1 month? Will both payments count or just 1?
So good question. So you can't, yeah. So people are like, I'm going to make 5 payments this month. It'll count. No, it's just 1 payment per month.
Sorry, even if it happened like prior, like in 2015, 2016.
Yeah, they're not going to count double payments. Yeah. So what can happen is, and I want to make sure I say this properly, you can make, like, let's say you wanted to pay on 5 months, like you can make a payment for like the equivalent of 5 months and it'll count as 5 payments, but the cap for that is 12 months. So yeah, so even if you made 2 payments on 1 month, like it's still only going to count as 1 month, if that makes sense.
And then Jacqueline had one other question. Do we have to do the employment certification for every employer?
Correct. You absolutely do. And when you fill out the form online, what you'll see is when you put down each employer, you'll get a long PDF that'll have a signature for employer and then you for each employer. And you can just send them the full form. You can send them just their part, as long as they send it back to you and then you sign, and then you have to mail it in once you have your signature for each one and then the employer signature.
A couple more. Maisha, thank you. This is really important, helpful information.
Of course.
If we faxed in the form, so I'm not
Yes.
sure if that's the employment certification or the application, but if we faxed in the form,
Yep.
is there a way to confirm that it was received?
So I faxed in my form. Okay. Because I went to Staples because I did not, I faxed in and mailed. I think I was just being my normal self because I was just like, I wasn't sure. I faxed in the form. You can call Mohila. So what you would do is, even if you get a confirmation on your end, you can call them maybe in a week and confirm that they've received it, or maybe call the next day. I think I called and made sure that they had it, but I also mailed it in again. So it doesn't hurt to do both. I did both. I think I made a copy. Oh wait, I guess I made a copy of the signatures, but I faxed in the original and then I mailed in a copy. But you can just call Mohila and confirm that they've received the fax. And if they said they haven't, then mail it in the original or try to fax it again.
All right, we've got what number of hours counts as full-time? One of the employers I worked for, I started there at 3/4 time and then moved to full-time, but I was considered full-time for the purposes of benefits because it was more than 30 hours when I started.
Okay, Elizabeth, I'm gonna put you on the spot. How many hours is 30? How many hours? I just said it. How many hours is full time? I just said it.
You said 30.
I did. So for PSLF purposes, it is 30 hours. So the organization may consider their, like I heard you say 3/4 time. For the Public Service Loan Forgiveness Program, it is 30 hours. So it has to be the equivalent of 30 hours or more. Or, I'm sorry, let me back up. If you've done part-time, if that was another piece of this. Let's say you worked during the week, 20 hours at one place and 10 hours at another place. If that, and they both are qualifying employers, then the part-times can equal the 30 hours of full-time each week. Then that will still count for the qualifying employer, but it has to be 30 hours. Great question.
Please confirm that if you're already approved for the basic plan, do you have to apply separately for the limited waiver?
So when you say you're already approved, that's a good, so is this somebody that already applied for, oh wait, did I hear something? Is this somebody that already applied a while back, or are they a new applicant? Who asked the question?
Hi, it's Cheryl. I'm asking.
Yeah.
Yes, I applied way back and I actually got my notice saying how many qualifying payments I've made.
Okay.
So my question is, this limited waiver plan sounds completely different. So is it a different application process?
It's not a different application process, but when did you actually apply for the basic plan? I'm sorry,
2
when did you
years ago.
apply? It was 2 years ago. Okay, so it's been a while. Okay, so you have been making your payments. So you would need to apply again because your COVID payments are not part of that initial payment that you had, correct?
Correct. I haven't made any payments during COVID.
Okay, but those count. So what you would do is, it's the same form. You would just fill that same form out again, and then you would put down any employers that were previous employers that would count, and then they would also count the COVID flexibility. So you would just need to complete the form again. It's not a separate form, it's just the same form, but you would just need to apply again.
Awesome. Thank you so much.
You're welcome.
All right.
Yeah, that's a great question, because some people are like, I don't need to do anything. If I already applied, they're just added, but you do still need to apply again. So just apply again.
And Maisha, our last question, which is, oh, nope, hold on. What if you have not applied for the basic yet? Do you fill out 2 forms now, or just the basic form now if you apply before October?
So let me clarify, and I know, I apologize, I didn't mean to confuse you all. There is only one form that you are going to fill out. You just fill out the Public Service Loan Forgiveness application, which is the employee certification form. The limited waiver is just an additional space. It's just an additional, how do I want to say this? It's just an added bonus to the program itself. There aren't 2 forms. All you're going to do is fill out the form. And what will happen is, because remember, you're including past periods of repayment, you're including previous employers on the form. So the form is going to cover what we talked about regarding the limited waiver and then the basic plan. So there isn't 2 forms. You're just going to fill out the one form, put down your previous employers. And what will happen is the department, along with MOHELA, will look back at your previous employers. They'll look back at all of your payments, decide which payments are qualifying, and then they will inform you how many payments count. Let me also say this, you all. I consolidated back in March because I had FEL loans. I don't have a final count yet. So I'm going to be really honest with you all. I received a lot of correspondence telling me, so first and foremost, consolidation is one. That's separate than the form. You will have to consolidate. There is a separate link to consolidate. You also have to fill out the Public Service Loan Forgiveness application. That is separate. Once you consolidate, you will get you'll get a lot of correspondence in the mail. You consolidated. I was like, great. I got a letter saying, hey, you've applied for Public Service Loan Forgiveness. Great. Here's what to expect. Because they have to go back and look at your employers, you're going to get a few counts. So my first letter said that I had 118 payments to still make. And I was just like, okay. So it's the government, you all. So you have to be patient. when I say it's the government, is they have to work with your previous servicers to do the count, and they have to go back and look at the employers and do the count. So my first number was 118, and then my second number back in July was 35. So they had counted when I worked at a public charter school, but they have not counted any of the 12 years I worked at the Department of Education. So what should happen is my next letter, well, I'm sorry, the letter that I also now have is, I was working with Fed loans. They've now transferred it over to Mohila. There's steps to this. So I say this to you all to say, apply now, but it will take some time. So you're going to have to be patient until you get that final number. And I cannot give you a date. If you apply like next week, you won't, I'm telling you all, you're going to have to just be a little patient with it, but just get the process in, and then you should be good. So I'm hoping by the end of this year, I get an updated count, but I don't know. But I'm in the system and I'm okay. That's what you want to do, is definitely be in the system. So just apply. There is not 2 forms. There's only 1.
So Maisha, I've got 1.5 questions left. And
Okay.
then I'll say, we want to be mindful of the time. So if anyone has any other questions that come up, again, we'll make sure to share out all of this information and provide the links for more questions and follow up to folks as well. So, hi, thank you. This information is so helpful. What if this is your first time working for a qualifying full-time employer?
Yep.
Is it worth it to begin the process and apply for PSLF?
So, right. So it depends on the plan. So that's a great question. That's a loaded question. So there are some people, I'm just going to throw all this out here, and then it's because my friends are like, what should I do? And I'm like, I can't really tell you what to do, but here's what we can talk about. So if you're your first time employer, which is a great question, first time working for a qualifying employer and you just started, depends on the type of repayment plan you're on. Some people are already on a standard plan. A standard plan is 10 years, right? So if you're on a standard plan and you're not on a 30-year or 40-year plan, it's going to be the equivalent of public service loan forgiveness. So you have to decide whether you think, if you're already on a 10-year plan, your loans are going to be forgiven around the same time. However, remember I mentioned that under public service loan forgiveness, the COVID flexibilities give you an additional 30. So no one's starting at 0. Everyone's starting with at least 30 credits, excuse me. So I think you have to decide, if you have a FEL loan, you're going to consolidate. Will that make your payment higher? What's your payment now? What financially works for you? I think that it's always really important to start the process if you have direct loans. But again, if you consolidate and the amount is going to be a financial burden for you, then you kind of have to decide. Some people are on 10-year plans. I don't know who is. Some people are on 30-year plans. I'm like, if you're on a very long plan, I think you kind of have to look at the benefit of applying, and you're with a qualifying employer now. Here's the other thing. Let's say you're someone who was with a qualifying employer previously. Let's say right now you're working for a private entity and you apply and let's say you're at 118, but you're not with a qualifying employer now. In order to take advantage, you have to go back to a qualifying employer. So that's the other hard part of this. It's kind of like, there's caveats to it. But if you're with the qualifying employer now, I think it's very advantageous to just look at what plan you're on, decide if you think after you make the 120 payments versus paying for a longer time on your loans, if you want your loans forgiven sooner than later, I think the plan is a really good benefit for you. Good
And then
question.
Maisha, Sandra had asked, how do we sign up for future webinars?
Oh, I will, if it's okay with you all, I can send you all the links for the webinars that are coming up in a flyer for the boot camp. So you'll see my face again. Hopefully that means you'll come back along with some colleagues. So there's some good information there that will be about public service loan forgiveness as well. So I'll make sure to send that to you all.
Thank you. And Jacqueline and Aaron, I saw 2 more questions trickle in. We will make sure that you have contact information to follow up and get those answered.
Okay, perfect.
All right. Well, thank you so much, Maisha. This is very helpful information, for me personally. I know I learned a lot, and I see in a lot of the comments that it was very helpful. So we really appreciate you joining us today and sharing so much of your knowledge. And Lizzie, thank you so much for leading the Q&A. Appreciate it. We did record this, so we will be sending it out, and we'll also send out all the resources that Maisha sends our way, so that you all continue to be informed. Thank you all so much for being with us today, and we look forward to connecting soon.
Bye, everyone. Enjoy the hot weather. Enjoy the rest of your day. Have a great weekend.